Hello to you all, and welcome to another Forex trading tutorial. You are with Trendy from Currency Academy, and I'll be showing you guys today how to use the moving average indicator to employ into your trading toolbox and basically become a pro trader using the exponential moving average, which is the one that I'll be using in my examples. Okay, rule number one, we only use a moving average in a trending market, okay? Because a moving average is susceptible to spikes in a ranging market, and I can clearly demonstrate this by showing you guys exactly what happens when a moving average has to be used in a ranging market. Do you see that the market is stuck in a box, if you will? So this is basically ranging right here, okay? So what happens is the moving average becomes susceptible to spikes. As you can see, there's a lot of spikes over there, and whatever support and resistance levels that the moving average predicts do not come into play as planned, okay? And there's lots of false signals there in a ranging markets with fake outs. So for you traders out there that want to avoid that, avoid using a moving average in the ranging market. Okay, so a moving average, as we will demonstrate to you guys today, it can act as a support and a resistance tool. Okay, so a support level is a psychological area where traders see that it is good to buy, and a resistance, it is good for traders to sell. Okay, so we have here a support level. As you can see, the price reaches the exponential moving average, and when it does, traders push the price up. Okay, so what happens is, usually what should happen is every time the price reaches the moving average, okay, because we are going towards the upside here with the market, what should happen is that the traders should push the price higher, okay? And we also have a support level here, right? So what happened in this case is that it broke below the support level. So what happens when the market breaks below a support level? The support level becomes invalidated and turns to a resistance. All right. So what happens when the support level becomes a resistance? Traders now find a psychological area to sell now. Okay. So what happens? You can clearly see this with the market reaching the exponential moving average, and every time it does, traders see a good area to sell, pushing the price lower. And that's exactly what happens. Okay. So as you can see, here's our resistance again, trying to play out. And what happens is traders found support instead. The resistance became invalidated, and now market price is trading above the exponential moving average. All right. So the first thing that you want to do when employing your moving averages is selecting the periods. Okay. So I'm going to click CTRL and I, right? So that I can edit. I want to see exactly which period of moving average I'm using. Okay, 14 is good for me, right? I can definitely use 14. This is MT4. I can also add another moving average right here. It's indicators, it's a trend indicator, right? So we go to indicators, we go to moving average, right? And here you have it, moving average. Now you want to modify the style. So I want to use 50 now, and I want an exponential moving average. And of course, so that I do not get any confusion as to which one is the 50 and which one is the 14, I'm obviously going to change the color. All right, so here's a clear example of how the moving average helps you to find how the market is going to react. Okay, there's a crossover towards the downside here, right? The 14 period exponential moving average crosses below the 50 period moving average. This is a sell signal, right? The 14 crosses above the 50. This is a buy signal, and you can see how the market reacts as well. So this is how your moving averages work. Okay, so what is likely to happen here is that the market will reach the 50 period exponential moving average, and it will act as a ceiling as it did before, also known as a resistance. Okay, so by ceiling, using basic terminology so to accommodate everybody. Okay, so this is exactly how moving averages work. We can look at one more example. Let's take the US dollar to the yen. Not quite the best example because there's lots of crossovers. You can't exactly see what's happening here. Let's try something else. Okay, Euro to the sterling, right? Here's a moving average crossover. Do you see that the 14 crosses above the 50? What happens to the market? Goes towards the upside, and it usually holds as support. Okay, that's what usually happens. A crossover towards the downside here would be a crossover towards the downside and would be in favor of the bears. So as you can see, that did not happen. All right, the crossover did not happen, and the market continued trading towards the upside. That's as basic as a tool you can use for your trading strategies and how to trade. This is the exponential moving average. Of course, you can use the simple moving average, the smooth moving average, and any other type. Depends on your broker. We are looking at FX Glory for you guys that are US residents. FX Glory does accept US residents, and we are running a trading competition for 1,000 US dollars. It starts on the 1st of February 2017 and ends on April 2017. So you guys should check out www.currency-articles.com. Visit the website, subscribe for more videos, and I thank you for watching this video.